Well, good evening, everyone. It is Monday, February 9th. Bitcoin is trading right around 70,000. And today's a good day to talk about two more esoteric conversations that just keep happening. The first, which was sparked by issues that happened last week on the 5th, is institutions and its impact upon Bitcoin. And that drives right into the real picture, which is, can Bitcoin achieve its goal of becoming a global unit of account or store of value without full participation from inside the financial system? Well, let's start with that question because the answer is no, it can't. And if you look at the statistic, you'll understand why. Even gold today, and that's dominated by Indian households through jewelry, even gold today has more than 10 to 15 times the household participation rate that Bitcoin does. And that happened over 5,000 years of history. The stock market, which has more than 20 times the participation of Bitcoin in terms of material financial impact, is much newer than gold, obviously. And to get the penetration into the households that will be deciding what value is will require that kind of oomph. And if you think about it, it makes sense. When you talk about the idea of unit of account, everyone in their own country picks what their country says to pick. Now, in some cases, there are plenty of countries around the world that have, quote, dollarized their nations. It's particularly true in Southeast Asia and somewhat in Latin America, where countries that have had currencies that have gone up and down like ping pong balls have said, you know what, we're going to tie it to the dollar. But the dollar, as one of my friends in our spaces likes to say, is the tallest dwarf in an island of very, very short people. In other words, it's the best of all the fiat currencies. The truth is, all fiat currencies get debased because politicians can spend it at will, and there's a need for something different. But the countries are not going to give that up. They just won't. So what they'll do is they'll go back. Some will go back to backing their currency with hard assets. Now, throughout Asia, specifically China, they're making a big push to back the yuan with gold and silver, and that's causing all sorts of distortions. I don't know if distortion's the right word. All sorts of impacts in the precious metal markets. At some point in the future, countries may opt to use Bitcoin in that regard, but that will only happen when Bitcoin is accepted by the vast majority of their voters or their population because they don't want to trigger a riot. Now, if you look this week, there was actually a funny comment from the president of the European Central Bank saying, well, we will not put Bitcoin on our balance sheet because we do not want to put anything on our balance sheet that is used for money laundering. So, of course, my response to that is, well, that's funny because the dollar, by orders of magnitude, is the most used currency for money laundering. So I guess you're not going to back Euro central bank deposits with dollar assets. That would be a news. I suspect Trump would be leveling 100% tariffs on Europe if such a thing ever happened. But, all kidding aside, it is extremely important to understand how the mentality of these people change. Now, what's interesting is in the United States, the new Federal Reserve chairman, inbound, or at least the nominated one, Kevin Warsh, believes and has said that Bitcoin will be gold for people who are under 40, which means he believes a transition in that way will happen. But that's predicated upon increased adoption. So let's talk about that adoption. The notion that, and I dispelled this in an earlier video, this weekend in terms of paper Bitcoin, that the idea that because Bitcoin is being held by BlackRock or by Bitwise or by a company like MicroStrategy accumulating it, that makes it paper Bitcoin, which can be manipulated. I just don't see it for lots of reasons. And you can watch that video if you want to understand the reasons. But what it does do is it creates more utility for it inside the financial system. Now, the financial system itself does tend to do things like create options. So IBIT options, which had a large part in, once again, on February 5th's action, scares people. But ask yourself the question, if what you want is Bitcoin to be adopted, what's the best way to do it? Well, the best way to do it is to make it accessible via every channel. As long as Bitcoin retains the option for people to self-custody and use it for peer-to-peer value transfers, which it does, being a person who has self-custody. I have also participation in financial products that use Bitcoin ETFs, etc. I do both. I have also used Bitcoin for peer-to-peer payments. But not very often because of the tax implications, but it does work. And it is very important, particularly outside the United States. So That optionality is what matters, and it's tiresome to hear that it isn't. So everyone believes that the difference is a temporary trade, and that people who hold Bitcoin in self-custody are far less likely to sell it and far more likely to see it through to its end. But the statistics belie that. Last week, we saw an amazingly large dump, the largest dump in quite some time, the first over $10,000 fall in Bitcoin. And 90% of the Bitcoin ETF holders stayed firm. Now, if you listen to people like Jim Bianco, who predicted 2 years ago that once ETFs become popular, that it will tremendously increase volatility, he said, because those investors are far less likely to hold and they will sell at the first whiff of panic. Clearly, that's not true. And in fact, some of us, myself included, predicted that financial advisors and people with stable portfolio allocations would be the ones that buy it. And that's the people you want to be buying it. So that's important. Now, the last piece that's interesting, and it is interesting, is people belie or worry about correlation. They worry about the fact that Bitcoin has been trading recently a lot like NASDAQ companies, specifically software stocks. And that is true. Correlations come and go. It absolutely does. There are times when Bitcoin is correlated with software. There were times when Bitcoin was correlated with gold, albeit on a lag. And then there were times when Bitcoin was completely uncorrelated with silver, for example. And I made the point this morning that I really believe that Bitcoin and silver will become more correlated for a variety of reasons. The lesson here is correlations among individual assets are not stable. Moreover, beta, the amount that they move, are particularly unstable. These things matter. So when you hear something as a correlation of 0.6, that's generally more than enough for people to get excited and say, okay, well, that thing is going to move that thing. That means 40% of the time they move in opposite directions. That's what it means. And so you have to understand it depends on your time frame and depends on what's going on. But what did happen last week, and I believe Jeff Park, who has illustrated this well, was that a bunch of hedge funds, because there was a collapse in the software industry, collapse is the wrong word for it, but growing fear that SaaS business models are going to get destroyed because companies can build that software internally using AI. That's more or less what it is. And so their margins are going to come under pressure. And that is absolutely certain. Why it happened in one day, I don't know. But the market moves so much that a lot of risk managers tap people on the shoulder and said, hey, boy, you need to cut your risk. And when they cut their risk, what do? They start selling. Now, do they sell by hitting one button and whamming the price of the stocks down and ramming the price of Bitcoin down? No. They work it carefully using algorithms, sort of like what my company built, coin routes. And you see a slow, steady pressure or a fast, steady pressure. But you don't see these wicks with downs and ups and downs and ups and downs and ups. You see just straight down. Honestly, that's a better way to trade. And when you see institutions doing that, it makes it easier for people to understand what's actually happening. And for nimble retail traders, they can get out of the way better. So if you ask me, is this a good development? The answer is yeah. The more professional the market trades, the better off holders will be, the better off asset allocators will be. But you do need to understand that these sorts of correlations will every once in a while factor into the value proposition. It doesn't have anything to do with all of the other things that Bitcoin might be doing. And really, the biggest issues there are still the stories that have been driving it are quantum, which I think we're getting to a better place. I just read a thread between a couple of people and Nick Carter, and you were kind of getting to the idea that people understand that we can't ignore quantum. It isn't existential of a risk, but it's serious. And if we do something serious, we can head off most of the risk. And so having people like Coinbase coming out with their research, arguments and ideas, BitMEX coming out with research, Michael Saylor funding research will all mean that we are much more likely to become quantum resistant. Similar, people are worried about Epstein. And I've said this before, but it just annoys me so much, I'll say it again. I think that everything going on with the Epstein scenario it just makes me sick to my stomach. I cannot believe that in this world where the public is clamoring to know who was on the receiving end of those emails that were redacted, that we can't get it. The fact that the Bitcoin community found a few of its original people involved one way or another, and they're using that as an excuse to tank one of the only assets that Epstein clearly did not want to succeed. He was a man whose entire empire was built on the untraceability of cash. I mean, it's really ironic. But because of that, people sold. So, okay, here we are. Tomorrow I'll go back to talking more about markets. We'll see if there's any more volatility. The TLDR will be one way or another. I strongly suspect that we're going to chop around this range for a while until we build a consolidated base. I do not believe the charts that talk about why we're going to go down to the 30s or 40s. And I'll talk about some data about that tomorrow. But until then, stay safe, have a great evening, and we'll see you again tomorrow.